Welcome to Safe Simple Sound, where we unlock the secrets to smart financial planning. Today, we are exploring a fascinating approach to investing inspired by an unlikely source farming. We will dive into the sound profit harvesting system and discover how ancient wisdom about natural cycles can help us become better investors. Using AI voices to bring these ideas to life, we will explore how the system can help you capture gains during good times and protect your wealth during market downturns. Before we dive in, one quick note. In this episode, you will hear the AI refer to whole life insurance as an investment. Just to clarify, whole life insurance is not an investment in the traditional sense. It's a powerful way to save while also providing for your family after you pass away. I kept the term investment to encourage you to practice reframing it as savings, not investment, when considering whole life insurance. Let's get started.
Welcome back, everyone. Today, we're diving into a really interesting system for navigating the world of investing.
Oh, yeah.
It's called the Sound Profit Harvesting System.
Okay.
And
It's an interesting name.
yeah, and this document, it frames investing in kind of a unique way. It takes inspiration from something you might not typically associate with the stock market,
Oh.
farming.
Huh. Interesting.
Yeah.
I like it. It's
Oh,
a really
no.
clever approach because it takes that, age-old wisdom of working with natural cycles,
Right.
growth, abundance,
Right?
and applies it to the world of finance.
Exactly. And just like farmers prepare for different seasons, the Sound Profit Harvesting System helps investors think about capturing gains during those good times and safeguarding against the inevitable downturns.
Yeah, like those
Those lean
inflective
times.
marks.
Lean times, exactly.
Yeah.
The beauty of this system is that it's not about trying to predict when those seasons will change,
Right.
which is impossible.
Nobody can do that.
Nobody can do that. Instead, it's about having a plan in place to be prepared,
Yeah.
no matter what the market throws your way.
I love that, being prepared, not predictive.
Yeah.
And the document drives this point home with a fantastic analogy: rainwater harvesting.
Oh, yeah.
Have you ever seen those systems where people collect rainwater from their roofs?
Yeah.
They use it to water their gardens or wash their cars, even flush their toilets.
It's all about using a natural
Yeah.
resource wisely and efficiently.
Yes.
You capture the abundance when it's available,
Right.
and then store it for when you need it most.
Intensely. And that's exactly what the sound profit harvesting system encourages you to do with your investment profits.
Capture them when they are plentiful, so
Yeah.
you're not left high and dry when things get tough.
Yeah.
The document introduces these two contrasting characters to highlight this systematic Sarah
Okay.
and hopeful Harry.
All right, and Sarah is our systematic investor who set these profit thresholds during the tech boom of the late 90s. She decided, for example, to take some profits off the table when her investments went up 20%, more at 50%, and so on.
And then we have Harry, who,
Yeah.
well, let's just say he was hoping to ride that wave all the way to the top.
Yeah, he didn't have a plan for taking profits and ended up
Okay.
losing it all when the bubble burst.
Oof.
Yeah,
It's a cautionary tale.
it is.
That emphasizes the need for a disciplined approach to profit-taking.
For sure.
Sarah's method protected her gains, allowing her to stay ahead of the curve even when the market turned against her.
So thinking about those two approaches, which one do you find yourself resonating with more? Are you a set it and forget it, Harry? Or are you more proactive like Sarah?
That's a great question for every investor to ask themselves.
Right.
Even if you're not day trading, having a system in place to lock in profits at certain intervals can make a big difference in the long run.
Absolutely.
Now, the document also digs into what to do with those profits once you've harvested them.
Okay.
One option it highlights is whole life insurance. But I'm curious about your take on this.
Sure.
Isn't that a bit of a, how should we say,
Yeah.
unconventional approach to storing investment gains?
It might seem unconventional at first, but if you think about it, it aligns perfectly with that rainwater harvesting analogy.
Huh.
You're taking those profits you've earned and channeling them into a safe and stable reservoir.
Okay, I see where you're going with this.
Yeah.
But many people might think, hold on, whole life insurance, isn't that a bit slow and steady for my go-go investment gains?
That's a common misconception. And to be fair, whole life insurance isn't for everyone.
Sure.
But the document isn't suggesting you put all your eggs in one basket.
Right.
It's about building a diversified portfolio where different assets play different roles.
So while you might have some investments geared towards growth, whole life insurance provides that element of stability and security.
Exactly.
It's about balance, right?
It's about recognizing that each asset has its own strengths and weaknesses. And for those seeking a safe haven for a portion of their harvested profits, whole life insurance offers some unique advantages.
All right, so we've got this picture of harvesting profits and finding a reservoir to store them.
Uh-huh.
But before we get too deep into the specifics of whole life insurance, I think it's important to address something that often trips people up, even seasoned investors.
Are you talking about the emotional side of investing?
You hit the nail on the head.
Okay.
We can be our own worst enemies when it comes to money.
Yeah.
Fear can make us sell at the worst possible time,
Oh, for sure.
while greed can make us hold on way too long.
Right.
And it's not just about knowledge.
Yeah.
It's about having the discipline to act rationally even when emotions are running high.
That's where having a system like this in place can be incredibly valuable.
Right.
It takes the emotion out of the equation.
Yeah, you're not making decisions based on gut feelings or market hype. You're following a predetermined plan.
Exactly.
So, with that in mind, let's shift gears and start getting practical. How can our listeners start building their own sound profit harvesting system? Where do they even begin?
Well, the document provides a clear roadmap.
Okay.
The first step is to define your RAIN.
Define your range.
Oh, yes.
Okay.
What are the signals, the conditions that tell you it's time to harvest those profits?
I love that. Define your reign.
Yeah.
It's like creating your own personal set of rules for when to take profits off the table.
And those rules will be different for every investor.
Yeah.
Some might focus on price targets, others on specific technical indicators. And for some, it might be a gut feeling that the market is getting ahead of itself.
So it's not about following a rigid formula. It's about figuring out what works for you, what aligns with your risk tolerance and investment goals.
Precisely.
Mhm.
The key is to have a system in place, a set of guidelines that you can stick to even when the market is making you feel FOMO or panic.
So we've defined our reign.
Yeah.
We've acknowledged that emotional discipline is key.
Right.
What's next on the roadmap to building this system?
The next step is to prepare your tools.
Prepare your tools.
Yes.
Okay.
Think about the practical systems you'll need.
Right.
Maybe it's setting up a regular schedule to review your portfolio, establishing those all-important profit thresholds, or using alerts so you don't miss those trigger points.
And these tools can be as simple as a calendar reminder or as sophisticated as an automated trading platform.
Exactly.
Wow.
The technology available today makes it easier than ever to automate certain aspects of your investing, which can be a huge help when it comes to taking emotion out of the equation.
Okay, so we've defined our reign.
Mhm.
We've got our tools sharpened.
Yeah.
Where do we actually store these precious harvested gains? Because it's one thing to capture those profits,
Right.
but it's equally important to make sure they're protected and working for you,
Yes.
even when the market takes a dip.
Exactly. Now, as we mentioned earlier, the document highlights whole life insurance as one option for creating this reservoir. And I know that might raise some eyebrows,
Sure.
but it's worth exploring the rationale behind it.
Absolutely. So let's address the elephant in the room,
Okay.
whole life insurance. I think many people,
Yeah?
especially those who are new to investing, might hear that and think, wait, isn't that for older folks? Or for people who are super risk averse?
That's a common perception. And it's understandable given how whole life insurance has been traditionally marketed.
Okay.
But the way the sound profit harvest system frames it is quite different.
Oh, okay.
It's not about using whole life insurance as your only investment. It's about strategically incorporating it into your overall portfolio.
So you're not suggesting people ditch their index funds and go all in on whole life insurance?
Not at all. It's about creating a balanced ecosystem, if you will,
Right.
where different assets play different roles.
Yeah.
And whole life insurance, with its unique set of characteristics, can be a valuable piece of that puzzle.
Okay, I'm intrigued. Let's break down those unique characteristics.
All right.
What makes whole life insurance so different from other investments?
Well, one key difference is the element of guaranteed returns.
Okay.
We know the stock market can be a bit of a roller coaster, right?
Oh, yeah.
Up one day, down the next.
Absolutely.
But with whole life insurance,
Yeah.
you're essentially locking in a certain rate of return.
So it's like having a portion of your portfolio that's shielded from market volatility.
Yes.
It's not going to skyrocket in value overnight, but it provides that steady, predictable growth
Yes,
that can be incredibly comforting when everything else is going haywire.
precisely. And in addition to those guaranteed returns, there are also tax advantages to consider.
Okay.
Your cash value grows tax deferred,
Yeah.
meaning You're not paying taxes on those gains every year
Right.
like you would with many other investments.
That's a huge plus, especially for those in higher tax brackets.
Yes.
And then there's the liquidity piece. Some people might hear insurance and think, okay, my money is locked up until I die.
Right.
But that's not the case with whole life insurance, is it?
Not at all. You have options for accessing those funds while you're alive. You can take withdrawals or you can take loans against the policy. It's about having that financial flexibility without having to sell off your investments at potentially unfavorable times.
That makes a lot of sense. So it's like having a rainy day fund that's also growing over time
Yeah,
and has some nice tax benefits.
that's a good way to think about it. Now, I know some people are probably still skeptical about whole life insurance, especially those who are accustomed to the potentially higher returns of the stock market.
Yeah, and that's totally valid. There are always trade-offs to consider. But I think it's important to remember that the sound profit harvesting system isn't about putting all your eggs in one basket.
Right. It's about diversification and recognizing that different assets serve different purposes in your portfolio.
Yeah.
Whole life insurance isn't meant to be a get-rich-quick scheme.
Right.
It's about creating a solid foundation, a financial fortress that can weather any storm.
And speaking of weathering storms, I think this brings us back to that crucial element of mindset that we touched on earlier.
Yeah.
Having the right psychological approach to investing can be just as important as having the right strategy.
Absolutely. The document really emphasizes the importance of emotional discipline. It's so easy to get caught up in the hype of the market, to let fear and greed dictate our decisions.
We've all been there, right?
Right.
Chasing those hot stocks only to see them crash and burn,
Right.
or panicking and selling everything when the market takes a dip, only to miss out on the rebound.
Exactly. And that's why having a system in place like the sound profit harvesting system can be such a game changer. It provides a framework for making rational decisions, even when your emotions are telling you to do otherwise.
And I think having that reservoir of harvested profits
Yeah.
can also provide a sense of psychological comfort. Knowing you have that cushion of safe and stable funds can give you the confidence to ride out those market fluctuations.
It's like having that emergency fund that gives you peace of mind, knowing you're prepared for whatever life throws your way.
Yeah.
But it's not just about playing defense.
Right.
It's also about being able to seize opportunities when they arise.
So, if you see a great investment opportunity during a market downturn, you can tap into those harvested profits without having to sell off your long-term holdings at a loss.
Exactly. It gives you that financial flexibility to act decisively when others are paralyzed by fear.
Okay, so we've talked about the psychological benefits of having this system in place.
Precisely. And this brings us back to the importance of diversification. The sound profit harvesting system encourages you to consider a range of options for storing those gains.
Right. It's about creating a balanced portfolio that aligns with your risk tolerance, investment goals, and time horizon. Some people might be more comfortable with a heavier allocation to stocks, while others might prefer a more conservative approach with a larger portion in bonds or real estate.
The key is to understand the characteristics of each asset class
Yeah.
and how they can potentially complement each other within your overall portfolio.
And I think it's important to acknowledge that not everyone has the time, expertise, or inclination to manage their investments this actively. For some, a simpler approach might be more suitable, like working with a financial advisor who can help them implement these principles and make informed decisions.
Absolutely. There's no shame in seeking professional guidance, especially when it comes to something as important as your financial well-being. A good advisor can help you tailor the system to your specific needs and circumstances.
So as we wrap up our deep dive into the sound profit harvesting system,
Right.
I want to leave you with this.
Right.
Imagine yourself 10 years from now. What will you be more proud of? Having chased the latest investment fads, experiencing the highs and lows, but ultimately ending up no further ahead than you are today. Or having had a system in place to systematically harvest those gains, weather those market storms, and steadily build a financial foundation that can support your dreams and goals.
It's a powerful question, and the choice is yours. The sound profit harvesting system provides a framework for achieving long-term financial success. But it's up to each individual to take action, to define their reign, prepare their tools, create their storage, and cultivate that essential emotional discipline.
We encourage you to revisit the source document for more details. It's packed with real-world examples and further insights that you can explore at your own pace. And remember, the journey to financial freedom is a marathon, not a sprint. Stay focused, stay disciplined, and keep harvesting those gains.
Thank you for tuning into Safe Simple Sound. If you found value in today's discussion about sound profit harvesting system, visit savesimple.com/podcast for detailed show notes and resources. Remember, successful investing is not about prediction, it's about preparation. Until next time, keep growing your financial future, one smart decision at a time.